Hello, Market Insights watchers. Well, in Market Roundup, housing's pent-up demand, the next trend to follow, find out what we think. In tech megatrends, we'll connect the dots to show how new AI trends and artificial intelligence are turning the home buying experience on its head, and one company that's leading the charge. And in Crypto Corner, Ian will answer your crypto questions on wallets, plus the latest happenings in BlackRock and the crypto space. So stay tuned for that. And please remember to subscribe and like this YouTube channel, the Bannon Hill YouTube channel. Let's get to it. Hi there, Ian. How are you this Friday? We are recording.
I'm good, Amber. Just gearing up for Easter. What are you cooking for Easter dinner this year?
I don't cook Ian.
Oh, okay. Where are you ordering from?
How about eat? I guess we'll just order something. I'll try. I'll give it a try. My
Oh,
husband
fair enough.
is a good cook, so we'll see what he'll cook up. Not me, though.
My 3-year-old told me this morning that she expects a life-size chocolate bunny this year. So that might be what we're having for dinner. Honey, I'm totally kidding, but
I
she
know.
might be a little disappointed on
Just a
Easter
one-night
morning.
dinner.
Yeah, something like a little smaller, not really life-size, but yeah.
Okay, very good. Okay, everyone. So in Market Roundup this week, let's focus on the U.S. housing market. A new study from Bloomberg shows that pent-up demand, years of underbuilding, and the possibility of mid-year rate cuts should lead to increased home building activity this year. The study estimates that, quote, underbuilding of homes since the global financial crisis has led to a structural shortage of housing, and it will take roughly 3 more years to get back to the historical average. So with the Fed likely to start cutting interest rates mid-year, a pent-up demand for housing will likely drive new construction for single-family homes, end quote. Now, Ian, the study found that home builders should remain optimistic about housing demand, which will likely support new home construction. And even with home prices obviously still being high for prospective buyers, new home builders are in a quote position to offer discounts or other incentives to encourage sales. The most common type of incentives are discounted home prices, a waiver of closing costs or fees, offer of upgrades, a mortgage rate buy downs, and absorption of buyers' financing points. Some builders actually have begun offering variable rate mortgages at below market rates for the first year, after which, of course, according to the latest March Beige Book, buyers reportedly expect rates to be lower, end quote. So, and finally, from an economic data standpoint, have to say this, building permits, a leading indicator of construction, were up 1.9% in February. Permits for single family homes are rising and are now 19% above the pre-pandemic average from 2019. So with the focus on the housing market in this webinar and tech megatrends, I'm going to connecting the dots there on how new trends in artificial intelligence are turning home buying experience, of course, on its head. And with that, like a company that's really taking a lead in how this AI intersection in home buying is working. So Ian, any thoughts on the US housing market and what's happening there?
That's a great. I love the way you outline that first. I think that the bigger picture of what's going on, and the megatrend that we've highlighted is the idea, the work from home movement.
Yes.
And I know you're seeing this around a lot of cities, New York in particular, where people are moving out of New York City for one reason or another. Mostly it's because they can work from home, or they only have to work in the office 2 to 3 days a week. They say, hey, I can do the commute a couple of days a week. I'll move to the suburbs. So the suburbs around New York in particular have been really hot for the last couple of years.
Mm-hmm.
And that's one of the reasons that, that's been driving first-time home buyers. Another thing is that millennials are at that age when they start settling down and having families. And when that happens, they look for a new house, a house, because you got to move out of their New York City apartment and move in a little more space. I think that uh, First of all, we're building more houses in this country than we have in the last 50 years.
Hmm.
And the problem has been systemic over the last like 3 or 4 decades. We built a lot of larger homes and not of the same single family homes. I think we look at a statistic where it was only like 15% of the houses built over the last 30 years were like in the starter home market,
Hmm.
because builders have been building because of the cost of permits, whatnot, in the larger home market.
Right.
Another thing that's happening too, Amber, and I don't know if this ever comes to fruition, but when Biden spoke at his State of the Union, he mentioned that they're going to provide a $10,000 tax credit for first-time home buyers,
Right.
and also to people who sell their starter homes. And he thinks this is going to allow them to build and renovate more than 2 million homes, and also lower rental costs. Because obviously, this is a problem. I mean, if you look at the price of a mortgage in 2020 versus what it is now, on
Mhm.
let's say a $400,000 or $500,000 home, you're paying double than what you were 4 years ago.
Right.
So it's definitely a problem in this country, and obviously it's also one of the reason why when you look at like people's views on the economy.
Mhm.
Obviously, there's inflation, the price of groceries have gone up, but a big thing is the fact that, it's hard to find a place. And when you do, the mortgage is so high that, it's much more expensive than it was 3 or 4 years ago. So, I think any step to actually open up more supply is going to be a benefit, not only for the market, but also for the economy in general.
Oh, yes, I agree. Great points, great points. So let's connect a dot now with what we really focus on here, which is artificial intelligence for Ian's brand. So in tech megatrends, Ian, I was recently watching a webinar hosted by Home Genius. I don't know if you're
Hmm.
familiar with it, but if you're unfamiliar with Home Genius, it's a real estate platform for real estate lenders as well as servicers. This platform puts artificial intelligence powered home search, pricing tools, evaluation, local agents, equity tracking, and potential cost savings, and more into one engaging experience available to consumers as well as their customers. So, Home Genius helps customers, quote, harness the power of AI and advanced machine learning in an all new home search experience, end quote. And for people seeking their dream home, you always love to have that experience. Seeking your dream home, customers can gather inspiration, upload photos of their dream home, one that they could probably create themselves through augmented reality type of program, and instantly see similar homes on the market through a process known as reverse image search. So,
Hmm.
so reverse image search lets the consumer upload their own photo to search for their home that they want, and think of it as the ultimate Pinterest experience.
Interesting.
Interesting. And also, Home Genius has a product called Home Genius IQ. It's proprietary AI and computer vision tech that analyzes home photos to score the condition of the home, thereby engaging home buyers with instant property estimates. And where evaluation is concerned, their Genius price platform, it actually takes home buyers and sellers beyond the tables and the calculators and uses an automated instant home value estimate driven by AI, advanced machine learning, and Home Genius IQ. So, meaning that the photos of the property that's for sale are factored into a value estimate of the home automatically. So to cap it off, I was reading what Eric Ray, Senior Executive VP and Chief Digital Officer, co-founder of Home Genius, had to say. And Eric said, quote, artificial intelligence is poised to truly transform the way home buyers and agents buy and sell homes. And Home Genius IQ is the leading edge of the revolution by allowing home buyers to upload photos that illustrate what they're looking for in a kitchen, in a bedroom, in a bathroom, or a family room. A Home Genius enables users to match their vision of a dream home to a property in the real world, end quote. So in case you're wondering, Home Genius Incorporated is a subsidiary of Radian Group. This Radian Group actually trades on New York Stock Exchange, that ticker's RDN, and its family of companies really just combine an array of title, search, real estate, as well as tech products and services into one full service ecosystem. So, Ian, it's always, for me at least, enlightening to see the intersection of artificial intelligence with a product or a theme or sectors that we encounter in our daily lives. And in this case, the housing market. So it's
Yeah,
pretty.
and you know what's the most interesting part is like normally all the only data you usually get out of the housing market traditionally was just like the numerical data, right?
Right.
What's the price of the house? When did it sell for last? What do the comps look like?
Mhm.
Now I love that they're using more AI imaging as well. So, it definitely makes the search process a lot easier than it has been in the past.
It certainly does. Whatever can make life a little bit easier. And it sounds like it could be fun and make home searching even more enjoyable. So you never
I
know.
mean, I know like during the pandemic, a lot of people got addicted to Zillow, so maybe this could be like a new labor of love.
Exactly. Yeah. I'm one of those people, Zillow.
Yeah.
Okay, so let's turn to Crypto Corner. Oh, we got a couple of great questions this week,
Mhm.
and I know you wanted to talk about BlackRock. So whatever you want to do first is fine with me.
Right, I'm gonna just want to highlight the big news of the week. So, we've spoken about BlackRock before. They are a $12 trillion asset manager.
Right.
They're run by Larry Fink, my good bud. I say that, in jest. Um, but he's been the spearhead of a lot of big investment movements in the
Mhm.
last couple decades. And what BlackRock did in the last week was they basically created a fund, but they run it all on blockchain so that you can invest in their fund. It's a crypto token. And when the fund is paying a dividend or some type of payout, it will automatically pay you along the blockchain. So there's no there's no need for like a securities exchange. The custodian would be similar to how you keep your assets on Coinbase. And usually, like when a company is paying a dividend, there's all these like steps and process that has to go to actually make the payout.
Mhm.
Sometimes, they got to deposit in your account, or maybe they mail you a check. In this case, it's all done automatically on the blockchain. And I think this is the beginning of asset tokenization. It's something that has been in the works for 6 years in crypto. I spoke to Deutsche Bank back in like 2019, and this is when the beginning of decentralized finance came about. And I talked to their sales and trading team, and I kind of outlined about how the blockchain rails are just so much easier than what we do now because the plumbing of our financial infrastructure is like outdated. It's like having lead in your pipes, right? And blockchain is going to give us a big upgrade for it in it. And BlackRock doing this is like another big step to this movement from traditional finance to decentralized finance. Now, one of the companies that BlackRock is already working with, I don't want to mention because it is in our Next Wave crypto portfolio. And, I don't think it'd be fair to subscribers to start
Mhm.
talking about it, but
Mhm.
they have already started to list some of BlackRock's ETFs on the blockchain. And I believe that this protocol is really poised to become, the main one in decentralized finance. The reason for that is because eventually the SEC is going to come around and say, hey, if you are paying somebody a dividend on their staked assets, then you are a security, right? But
Mhm.
what this company has done is basically gone through all the regulatory approval, and they only offer their actual products, not the token. You can invest in the token, but their products are only available to accredited investors now.
Mhm.
And they're going to go through the process where the SEC will say, okay, you can offer this to everybody, but you can still invest in the token in the underlying protocol, even though you can't invest in their product. So think of it this way. You've got a company like Fidelity, right? You
Mhm.
can invest in Fidelity's funds that manage stock portfolios, or you can invest in Fidelity, the company. This
Right.
would be what we're doing is investing in this crypto token that is basically the protocol, not investing in the funds that they manage. You see what I'm
Mhm.
saying?
Mhm.
And so, I just think that this is another step in direction what BlackRock is doing, and especially for this protocol,
Mhm.
it's going to work out pretty well.
Just pioneers, revolutionaries, I tell you. Very, very interesting there,
It's
Ian.
been a long time coming. I remember the CEO of the NASDAQ, Bob Greenfield, like in 2018, was
Mhm.
saying that everything is going to be tokenized at some point. And now we're really starting to see everything come on chain. At least this is like the door opening, and everybody rushes in to put a stock or a bond or some type of ETF and manage it on chain.
Mm. Super exciting. Oh,
Hmm
Okay, Ian. So we have a couple of questions that have come in.
Okay.
The first is from Joan. Hello, Joan. Joan writes, "Hi, you two. Thank you for your great coverage of some of the important stuff going on, which is plenty." You're most welcome, Joan. So at the end of your most recent webinar, William asked a question about wallets. And it was great to hear your insight on that, Ian. My question is, how is it safe to store your crypto other than a ledger? Or is the best way to do it? What is the best way to do it? And what is the risk of holding it on Coinbase?
Great question, Joan. And I would preface this by saying that the way that we've stored our crypto and the safety of it has changed over the last 10 years.
Mm,
Okay. So 10 years ago, there was a hack of the largest centralized exchange. Back then, it wasn't Coinbase, it was a company called Mt. Gox.
mm,
Mt. Gox hack stole something like 15% of the world's Bitcoin. It was massive.
mm,
And after that, in the ensuing couple of years, there was one exchange hack of another. Um, Coinbase has, I believe, proven itself to be an exchange that it's okay to store your crypto on.
mm,
I believe that they have enacted enough protocols and safeguards that, I mean, it's not impossible, but it's very unlikely that Coinbase gets hacked. Now, Coinbase has some tools that you can use to better store your crypto as well. There's something called Coinbase Vaults. So let's say you have your Ethereum, your Bitcoin on Coinbase, you can put it in one of their vaults. And what that means is if you want to take your crypto out of the vault, it has to go through a cooldown period. So it means that if somebody hacks into your account, let's say they get on your phone or they're on you leave your laptop at Starbucks or whatever, and they get on your laptop and they open up if they open up your account, they could just typically they just send the Bitcoin right off your exchange to their wallet. If you have it in a vault, it's going to take a couple weeks to move. And
mm.
you will get all these email alerts as well in the process. So I find that to be, one of the more safe ways to store crypto is in a Coinbase vault. Now, there's another thing, and I think somebody also wrote in about ledger wallets as well, Amber, right?
Yes, yes. We heard from Clark, and Clark is referring, "Hey, Ian, do you recommend moving to crypto that I have over to a cold wallet if I
Okay.
plan on holding it a while?"
So a cold wallet is like a little, I don't think I have one lying around. It's like a little drive you plug into your computer and you
Okay.
can store your private keys on it, which basically controls your tokens on the blockchain.
Mm-hmm.
Now, the problem with a cold wallet is that you have to have basically a seed phrase, which
Mm-hmm.
means that they're going to give you 12 or 16 words depending on what letter you have, and you have to write them down, and then you have to store those seed phrase somewhere. And, if you're like me, who can be kind of forgetful because about like where I put things, I can be disorganized at times.
Mm-hmm.
You might lose that seed phrase, right? Some people, what they do is they actually take the seed phrase and then they go to a bank and store it in a vault.
Mm-hmm.
So, they know where it is and the bank is actually watching it over. But there have been instances in crypto where people stored millions of dollars of Bitcoin on a cold wallet and then lost the seed phrase.
There you go.
And if you lose so the thing is, like, if you have a thumb drive, your crypto isn't really on there. It's just the private keys. So if you lose that thumb drive, as long as you still have the seed phrase, you can get another drive and you'll still have the same private keys. You'll still be able to access those tokens.
Mm-hmm.
Like, the tokens don't really move off the blockchain. The only thing that moves around is what's called your private keys, which is the ability to move them.
Mm-hmm.
That makes sense. Like,
Yeah.
I'm not downloading Bitcoin off the internet onto a hard drive or into my exchange.
Mm-hmm.
I just have the private keys that allow me, yeah, to basically control when I can, move them around. And so, cold storage has always been one of the safest ways. I would just tell people that, the risk is basically like you have to have a really good um, protocol or system of where you save that seed phrase. But from my perspective, I actually trust Coinbase more than anything else. And also, I would say it's kind of like uh, you remember like Blaise Pascal, like the belief in the existence of God. He
Mm-hmm.
said that, it's good to believe in God because, if you don't believe in God and it's the end of the world, you're going to hell anyway, right? So it's like if you believe in God, it's the end of the world, you're going to heaven. So the thing is, like, in Coinbase, very similar in the sense that if everyone has their stuff on Coinbase, right, and Coinbase gets hacked, like the price of Bitcoin is going to drop so fast, like it doesn't matter whether or not you got your coins stolen
Mhm.
or not. So, I mean, that's just like one of the risks in crypto. And I would just leave it by saying this. Um, we are crypto is a unique asset class in the sense that there's always been capital risk in like you invest in something, the price could go down. There's also asset risk. So there's no other, unless you're going to hold physical gold at your house, like there's no other security that has this much asset risk. However, asset risk has gone down over time because the companies that custody your crypto have put better safeguards in count intact over time. Like you know, I wouldn't like 10 years ago. I would have said never keep your crypto on an exchange.
Mm.
Now it's like I think Coinbase is fine. That was a long-winded answer, but
No, it's a good answer. Good answer, as they say, Family Feud. Very good. Okay, well, Joan Clark, thank you very much for writing into us. And if you do have a question to address here on Market Insights, please email us at marketinsights@bannonhill.com.
Awesome. Thanks everyone for tuning in, and we'll see you next week. Take care, Amber.
Okay, you too, Ian. Bye-bye.
Bye.